and not that different.
This is India's #1 news network, and you're watching News9, English news as it should be.
Hello and welcome. You're watching Morning Brief at 9. I'm Shweta Kothari. On the show today, China has dragged India to WTO for what it offers by the way of PLI incentives for automotive industry. What does it mean for India? Also coming up on the show, Samvat 2082. Where should you invest and what should your investment strategies be? We'll discuss all that and more in just a short while from now. Hello and welcome. Let's start the show with headlines.
एसोसिएट स्पॉन्सर बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
US President Donald Trump dials Prime Minister Modi, calls him a great person and a great friend, says trade talks progressing well after a great conversation on Diwali Eve. And Delhi wakes up choking once again under a thick post-Diwali smog, recording its worst air quality in 4 years. AQI hits 361, prompting grab 2 measures in the city. And India and the United States are now nearing a long-stalled trade agreement that would reduce US tariffs on Indian imports to about 15 to 16% from whopping 50% at the moment. The deal hinges on energy and agriculture, may see India gradually scaling back its imports of Russian crude oil. India's Diwali sales soared to a record high of 6.5 lakh crore, according to traders lobby CAIT. The surge attributed to recent GST reforms and strong consumer confidence. India's core infra sector growth eased to a 3-month low in the month of September, with output rising 3% year-on-year. Provisional data from the Commerce Ministry shows. Net foreign direct investment into India fell by 159% in the month of August 2025, with more money leaving the country than entering it in this particular month. And this is the second time in financial year that outflows have exceeded inflows. And China has now filed a complaint at WTO alleging India's production-linked incentive schemes for advanced batteries, automobile and EV manufacturing violates global trade rules by favoring domestic goods. And India is in discussion with Russia to procure a large number of missiles worth 10,000 crore rupees for its S-400 air defense system. A high-level committee proposes 38 reforms for India's MSME sector, environmental rules, FSSAI and BIS. Key proposals include simplifying MSME definition and compliance, as well as easing GST returns to create a conducive regulatory framework for MSMEs.
एसोसिएट स्पॉन्सर बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
You're watching Morning Brief at 9. I'm Shweta Kothari. Our top story at this hour. US President Donald Trump says he spoke with Prime Minister Modi, with trade forming the core of their discussion ahead of Diwali. He described the US-India partnership as a strong, but underlined that tariff issues continue to be an area of concern. Trump called Prime Minister Modi a friend and also referred to his earlier discussions with Modi about maintaining peace with Pakistan, noting the stability in the region remains an important discussion for both the nations. Speaking from Oval Office during Diwali celebrations, Trump said that their conversation largely revolved around trade and economic cooperation between the two countries. He emphasized that US and India share a strong commercial partnership, but also warned that unresolved tariff issues still need attention. Now, Trump's remark comes at a time when Washington and New Delhi are locked in negotiation, albeit there is some progress there, and that progress has also been reported overnight.
Americans, let me also extend our warmest wishes to the people of India. I just spoke to your Prime Minister today. We had a great conversation. We talk about trade, we talk about a lot of things, but mostly the world of trade. He's very interested in that. Although we did talk a little while ago about let's have no wars with Pakistan. And I think the fact that trade was involved, I was able to talk about that. And we have no war with Pakistan and India. That was a very, very good thing. But he's a great person, and he's become a great friend of mine over the years. In a few moments, we'll light the diya as a symbol of faith in the victory of light over darkness. It's a beautiful term, light over darkness. That's what it's all about. It's knowledge over ignorance and good over evil. During Diwali, revelers recall ancient stories of enemies defeated, obstacles removed, and captives freed. The glow of the diya flame reminds us to seek the path of wisdom and to work with diligence and to always give thanks for our many blessings.
All right, there you have it. Donald Trump ahead of Diwali celebrations there in Washington, describing what he calls fruitful conversation with the Indian Prime Minister. But moving on now to an important breakthrough that has come in between India and United States. They're nearing a long-stalled trade agreement that would reduce US tariffs on Indian imports to about 15 to 16% from current 50%. The deal, which hinges on energy and agriculture, may see India gradually scaling back its import of Russian crude oil. Now, US President Donald Trump said that he spoke with Indian Prime Minister Modi on Tuesday, focused on this conversation on trade, and President Trump also said that energy was an important part of their discussion, assuring that Prime Minister Modi says he would limit oil purchases from Russia in the near future. Now, as part of negotiations, India may allow increased import of non-genetically modified US corn and soya meal. An English news daily reported here in India, citing news sources. A deal may also include a mechanism to periodically review tariffs and market access. Finalization of a bilateral trade deal is likely to be announced at the ASEAN summit this month. So a major breakthrough there as far as a trade deal between India and US is concerned. It looks like we're finally arriving there, and the tariff may be brought down to 15 to 16% from existing 50%, and a trade deal could be announced as early as this month. Moving on now, China has dragged India to WTO. China has alleged that certain conditions in India's production-linked incentive schemes for advanced chemistry, cell battery, automobile and policy to promote manufacturing of electric vehicle violate global trade rules, and has filed a complaint against these measures at the World Trade Organization. Now, according to a communication by WTO, China has sought consultation with India on these measures under WTO's dispute settlement mechanism. Beijing has stated that these measures adopted by India are contingent upon the use of domestic over imported goods and discriminate against goods of Chinese origin. The complaint names 3 Indian programs, namely the National ACC Battery Storage Scheme, the PLI for automobile and auto components, and the electric passenger car manufacturing schemes. China's complaint about India's reported EV subsidies come as Beijing is now seeking to boost exports of its electric vehicles to India, considering the size and the scope of India's auto market. Chinese automakers also see it as a major source of expanding sales outside of China. With India's trade deficit with China nearly at $100 billion and China hunting new EV export market, this dispute could have ripples across global auto supply chains. But what will it mean for India? Let's talk about that. Joining us on the show is Dr. Jayant Dasgupta, former Indian ambassador to WTO. Also with us is Dilip Chinoy, former DG. CM, I want to come to you first, Mr. Chinoy. The fact that, China has now taken India to WTO, it looks like an extreme measure, but also, a testament to the fact that India has a very robust automobile market, which China is hoping to tap into.
No, thank you, Smrita. And I think this is a very interesting topic because, first time we are seeing anything being referred to WTO. Post Trump's decision, one thought that the WTO had kind of lost its relevance and there were challenges before the organization. But if you look at the auto industry and look at the PLI scheme, I think here the main thing is that India's PLI scheme is really designed, it's across manufacturing, is to correct historical manufacturing imbalances and build domestic capability. I think in the EV space and the three things that the Chinese have actually referred to, we are looking at advancing the global green kind of climate and net zero transition. I think PLI is not protectionism, as the Chinese are calling it. It's maybe a strategic diversification. It is non-discriminatory. And I think India's real objective at that time and during COVID, as we saw, is really to reduce dependence on a single country and build a resilient green manufacturing ecosystem across different industries, including auto. Auto is very strategic to India's manufacturing sector. It accounts for nearly 7% of the GDP, and we are a growing market. So if you look at that and look at the different transitions that are happening in the auto industry, there are, every auto major around the world is looking at India. But in the auto sector also, there have been different challenges for the companies from China, whether it is the MG Motors and they got into a joint venture with the Jindals, and whether it is BYD. So there are a different set of challenges there. And I think this is kind of a strategy to also address other pain points in the auto industry, which are actually impeding the entry and expansion of Chinese firms in India.
All right. Perhaps China looking for an entry point and a conversation with WTO there, dragging India to WTO, it sees as perhaps a relevant way and a pertinent way of making that inroad into India. Jayan Das Gupta, former ambassador to WTO, also joining us on the show. Ambassador, I think the question that lingers here is that China itself offers heavy subsidies to its EVs, its battery makers. So does this complaint and accusation of protectionism hold any merit? And can WTO, a consultation with WTO, result in any form of change or stoke a change with India's policy when it comes to protecting its automobile sector?
The first thing I wanted to say is that, if China is subsidizing, and it indeed does subsidize very heavily,
right,
then it has to be taken separately from the case that China is trying to make out against India on subsidies. So that these things will have to be taken up separately. The second point is that China's complaint has been registered and it has called for consultations, as is provided in the dispute settlement understanding of the WTO. So there would be consultations, and in all likelihood, it would not end in any result. So after that, China has the discretion to file a submission for resolving the dispute before a panel, which comprises 3 persons. Now, the panel stage, after the panel has given its ruling after hearing both sides, the party where both the parties get the chance to mention whether they want to file an appeal, because there may be certain points in the panel ruling which goes against one party and certain other points which go against the other party. So this is something which is now, in all fairness, not available, because the appellate body which rules on appeals is non-functional since 2019. So, till the appeal process is over, till the appeal is decided in the WTO, the party which gets a favorable ruling can't retaliate or take countermeasures to, offset the nullification and impairment which China has alleged against India. So, this is just a symbolic gesture. The panel may rule against one side or the other, but whichever side loses at the panel stage will prefer an appeal, and the appeal will not get decided because the appellate body is not functioning. So this is just a way.
Would it mean that this is all an effort to mark their protest, knowing very well that this will not result in any change? So it's all symbolic, therefore?
Yes, it is symbolic, but it is also a way of putting pressure on India, because soon after this may come another jolt in the way of stopping. I hate to say this, but this is an apprehension, stopping rare earth magnets, which are used extensively in the auto industry and in many other industries in India. Because China has already put in place a kind of export control regime for rare earth magnets. Now it may go one step further for India, saying that this dispute is pending and it helps your auto sector. So we will impose further curbs, we will stop exporting. They may not say it explicitly, but carry it out all the same.
All right, interesting. That's very interesting. This is like a precursor to what could come by the way of perhaps a complete halt to exports of rare earth minerals to India. So a precursor to that by the way of an existing dispute in WTO. I want to come back to you, Dilip. Beijing's objections also overlook the fact that India's PLI schemes are in fact technology neutral. They're open to global participants as well.
Yeah, you're right. I think they're technology neutral and they are country agnostic. Okay, but you must also remember there is a press note 3, which is also a different challenge. Although the Chinese have not mentioned that specifically in this thing. And also, if you look at it, the global scenario in green transition. I mean, if US and EU and other countries can link incentives to domestic content under their green kind of strategy, developing countries like India must also retain similar rights to ensure equitable industrial participation. I mean, the recent US Act of 2022 is a case in point. So, I believe that like Ambassador Dasgupta said, this is a kind of a discussion point. And, very interestingly, maybe Ambassador Dasgupta could also share the timelines. The PLI schemes are a 5-year period, right? And they're not really extendable. And I think in 1 or 2 of them, 1 or 2 years have already elapsed. So I wonder, what the time frame and how it's going to play out forward. But as Ambassador said, that they could look at putting temporary measures on export of critical components, and that itself could be used as an argument by India to saying that we are overly dependent on single country sources for some of these technologies, and therefore to promote global trade and equal access of technology and alternatives, we are supporting this in the larger good. So a different kind of arguments could be taken forward in this context.
Right, and I think we'll take that question up with Ambassador. Ambassador, what sort of timeline are you looking at as far as a resolution of the current dispute before it goes to the panel, before there's a ruling? What sort of timeline are we looking at? And in your assessment, is this complaint more about retaining dominance in the global EV space, the EV chain dominance that China continues to have, as opposed to, having a motive of entering India? If that's not the sole motive, perhaps the motive is that they are the dominant player in the global EV supply chain and they want to retain that position.
I think it is basically about getting access into the Indian market, because advanced chemistry cell batteries are only for domestic production, with 60% value addition domestically. The auto components and auto scheme that talks about incentivizing domestic manufacturing, with ultimately allowing a lot of 50% domestic content. So it is basically about the benefits that Indian companies which manufacture in India are going to get or are getting under the PLI scheme of 2021. And to get them to roll them back, get India to roll them back so that China can enter, because China is subsidizing very heavily. China has economies of scale. So China is wanting to enter this huge market, because you also must remember that the American market is more or less getting closed for China because of the high tariffs. The EU has recently imposed, I think, 27% tariffs on electric vehicles mainly from China. And China is by far the largest manufacturer of electric vehicles, which includes advanced chemistry cell batteries. And advanced chemistry cell batteries can also be used for other purposes as well. So this is, the third scheme which has been called into question is for passenger cars, electric vehicles, which is, aligned with this auto components and auto sector scheme of the PLI.
Right.
So they go hand in hand. So basically it is about getting market access into this huge market of India. And in this context, I think it needs to be remembered that the Chinese leadership has been mentioning, not of course President Xi, but other people, that India should join the PLI, the RCEP, for instance, because China is looking for market access. Other markets are getting shut down or partially getting closed, and there is this, recession or near recessionary conditions in many parts of the Western world. So the demand is falling. So China is looking for additional markets.
Question, I think I'll take it with Dilip before I let you two go. Is Indian EV market that lucrative, Dilip? I know we are registering 100% growth in sale year on year, but in the first half of 2025 itself, we've sold about 97,000 odd EV units. It's not a huge number when it comes to EVs particularly. In your assessment, is India a lucrative EV market? Is that the reason why China's taking such a step, taking India to WTO?
I think, Smita, India is a growing EV market. Our national goals and the whole decarbonization and net zero challenge is predominantly dependent on decarbonization, the transport sector, and EVs is one of the ways to go. Till we find another alternative to EVs, or hydrogen becomes mainstream, or there's another alternative, I think the entire auto market is going to transition to EV. As you see in three-wheelers, there's a huge percentage of conversion. Two-wheelers is a bit less. Cars and really buses and trucks is not that much, but then the headroom for growth is there. You've recently seen the launch of a battery swapping truck, last week in Pune, and new technologies and new things are coming. So I think we are looking at double, if not triple-digit growth in some of these segments of the EV industry going forward. Yes, the numbers are currently not large, but they have the potential to be a very large EV market going forward. In fact, the third largest or even the second largest market in the world.
All right. Well, third or second largest market that India is excited about and China wants to penetrate sooner than later. Thank you very much, Dr. Jayant Dasgupta, as well as Dilip Chinoy, for taking time out for joining us on this very crucial story early morning today. But shifting focus now, this morning, Delhi woke up to choking under a thick blanket of smog, recording its worst post-Diwali air quality in 4 years. Now, yesterday, the city's AQI plunged deep into red, with PMI 2.5 levels soaring to a deadly 675. That's nearly 11 times the safe limit. It hasn't improved much since then, recording 424 PM 2.5 levels in Anand Vihar and 521 in Narayana Industrial Area this morning. This in the largest NCR area, Noida recorded 390. Faridabad 398, Gurugram 392. As lungs struggle for air, the political heat is also becoming equally toxic. A full-blown slugfest has now erupted between Aam Aadmi Party and BJP over who's to blame for the pollution catastrophe. Delhi Minister Manjinder Singh Sirsa, in fact the Environmental Minister, fired an attack on former Chief Minister Kejriwal, accusing him of ruining Delhi's air quality through Punjab, citing sky level AQI levels in Kapurthala, Jalandhar, Ludhiana and even Amritsar.
जानबूझकर जो किसान नहीं पराली जलाना चाहते उनको जबरदस्ती पराली जलाने को मजबूर कर करके उनके मुंह बांधकर पराली जलवाई जा रही। देखिए, पहले वीडियो देखिए। ये देखिए तरनतारन की है, ये बठिंडा की है, और सब में एक चीज कॉमन है। सब में कॉमन क्या है? इन सबके मुंह बांधकर इनसे जलवाई जा रही है। किसान पराली नहीं जलाना चाहता, लेकिन किसानों को कहा गया और ये सारा माहौल बनाने के लिए उनके बकायदा मुंह पे कपड़े बांधे गए, और देखिए कपड़े बांधकर उनसे मुंह से पराली जलवाई जा रही है, ताकि दिल्ली के अंदर इस पराली का असर हो और दिल्ली की सरकार को ये वो बता पाए, आज के अखबारों में छपा है, हाईएस्ट पराली की जलाने की घटनाएं कल हुई। अगर आपने नोटिस किया हो, मैं टीवी चैनल पे बोल रहा हूं, इसलिए सब ध्यान से सुन लें और मेरी बात गलत है तो मुझे साबित करें। हाईएस्ट पराली जलाने की घटनाएं कल हुई हैं।
कल रात के आंकड़े तो उन्होंने सार्वजनिक ही नहीं किए। भाजपा एक नंबर की झूठी सरकार है। 4 इंजन की सरकार ने दिल्ली को 4 गुना प्रदूषण दे दिया है। भाजपा को आज जवाब देना चाहिए कि उन्होंने लॉन्ग टर्म मेजर्स में और शॉर्ट टर्म मेजर्स में ऐसे क्या स्टेप्स उठाए। दिवाली से पहले, दिवाली के बाद उनका क्या प्रोग्राम है, क्या स्टेप्स उठाने का प्रोग्राम है, क्या उन्होंने पुलिस की ब्रीफिंग की, पुलिस ने कल कितनी इम्प्लीमेंटेशन कर पाए वो सुप्रीम कोर्ट के ऑर्डर की कि सिर्फ ग्रीन ट्रैकर्स ही चलेंगे और सुबह जो टाइम दिया और रात को जो टाइम दिया 10 बजे के बाद वो नहीं चलेंगे, उसकी किस हद तक इम्प्लीमेंटेशन कर पाई भाजपा, इन बातों का जवाब दे।
All right, it's Aam Aadmi Party versus the BJP in the national capital, blaming each other for Delhi's toxic air. Meanwhile, the citizens of Delhi NCR region finding it hard to breathe as of this morning. It's the beginning of Samvat 2082 and it's the start of a new trading and investing year. As we wish a prosperous trading year to our viewers, we are also trying to help you with your investment mantras in Samvat 2082. And to talk about that, joining me on the show is Rohit Srivastava, founder and market strategist, IndiaCharts.com. Thank you very much, Rohit, for taking time out. I want to begin with first thing first. And as we start the new year, the Samvat 2082, in your assessment, what are your favorite sectors? What would you go for? What would you pick, or rather not pick, as we began the new year, new trading year starting tomorrow?
But first of all, let me wish all your viewers very, very happy Samvat 2082, and I believe it is going to be a fantastic year ahead for equity investors. We've been through 2081, which was tough. Because we saw a serious correction, consolidation in various parts of the market, which in hindsight we'll say is very much needed because valuations in some parts of the market may have stretched. But at the same time, growth stocks have continued to grow and they've also bounced back the sharpest in this period. So what it's really pointing to is the return of the bull market that we were in and we've been in since COVID. And I think the next phase of that bull market has essentially started from the lows that we've made in August and September. So this is very important for people to understand and digest, because we've been hit by so much negative news in the last couple of months that you'd almost believe that this is not possible. But that's how markets are. They always make their lows on bad news and then we take off. The other big thing which will happen in the coming year is the shift between 2 major asset classes that have been in the news.
Right.
And that is between gold and silver and equities. I think in the year ahead, equities are going to far outperform gold and silver. I know we've been through a beautiful run in gold and silver over the last 12 months, or in fact 2 years. But I think that is sort of coming to a close. I'm not saying this is the end of the gold bull market. But over the next year, I think you will go through a consolidation phase where you will not see new highs in precious metals. And that is something important to keep in mind, especially if you're doing an asset allocation between the two. This is the ideal time for you to shift away from PMs into equity. So that's the other big trend to keep in mind. And then we can, get into understanding particular, segments or sectors.
Absolutely. Absolutely. And before we come to segments, I also have to ask you, people who are looking to enter into the market in Samvat 2082, what is the healthy way of getting better returns? Now, we've seen SIP folios also increasing, AUMs growing and swelling in 2081. Can we assume that that's the way to go about it? SIP is the way to go about it?
So now that's a person-specific question, because we always have to do a KYC when we meet a client, because does he have the time to put into the market to do his research over weekends, or is he subscribed to a good advisor who can help him do that? If not, then SIP is the simple answer for most investors who don't have the time or not dedicating the time to doing their investment research and analysis. But if you do that on your own, we recommend that you should be, fully invested in individual stocks, because that's where the big returns really happen. And during a bull market, and especially this particular bull market, what we've seen is the biggest returns coming from the mid and small cap segment, or the second line of stocks. Even if you look at the earnings growth over the last 3 years, it's been highest in the mid cap, small cap segment relative to the Nifty. I mean, there's almost 100 or 200 basis points, or rather more than that, 1,000 to 2,000 basis point difference at times between the growth rates between the two parts of the market. So if you're able to get a clue on the right growth parts of growth segments of the market using some data analysis, you would actually want to be invested in individual stocks that are showing performance. So chasing performance, as we actually call it, and sometimes we say don't chase performance, but this is the time where you actually want to chase performance, because you want to be in the best parts of the market and do really well.
All right, interesting. I mean, go beyond SIPs, also chase performance. Let's talk about sectors. In your assessment, what are the sectors to stay away from and stay invested in? And I'm talking about this in the background of all the geopolitical uncertainty that India is also seeing and is a part and witness to, especially when it comes to exports. There's no clarity as whether we are going to have a deal with the US. So in your assessment, do we stay away from export-oriented sectors like pharma, metals, auto, or is there a growth opportunity there?
So now I'll break it up for you. I think we put too much stress on the trade tariff news. I think when we sold off in July, that was the central part of discussion. But right now, we are sort of on a strong footing where a deal, as most are judging, will happen in the weeks or days ahead. Now, having said that, doesn't mean that I go and buy IT stocks or pharma stocks. So the view of mine has been that in this bull market, we've seen this, in fact, every 10 years, we've seen outperformance by the defensive sector. So we go back to the last decade, you will see that a lot of the companies which were in FMCG, pharma, consumption, they actually did very, very well. But we've also seen them not do well in the previous decade and then do well in the previous. So this is a cycle. We are in the phase where you don't want to be invested in defenses. So you stay, you can have some exposure, but you don't want to be significantly exposed to FMCG and IT, which are extremely defensive. Maybe parts of IT only in mid-cap stocks where you can see growth. And the same is in pharma also, where you can actually spot growth cycles. You may want a few stocks there, but you don't want it as an overall sector allocation. So you don't want to be in defensive. You want to be in growth. So the moment we talk about growth, we start thinking about where is the growth. So the growth usually in a fast-moving economy is going to be in various segments. Whether it's infrastructure, whether it's capital goods, or you even go down. You said metals. Now metals, while it may be related to the global market, there is a bull market happening in the metal space because the commodity cycle essentially picked up from since COVID. We've seen a long consolidation phase, but Indian metal stocks have actually outperformed global metal stocks, not just because of domestic demand, but also because of the weakness of the rupee. So there's actually a strong case for metals relative to the others, which I'm saying avoid. And lastly, I'd want to also add financials. Financials have gone through a long consolidation. Valuations became very low, but you've actually seen consistent growth in the financial space. And there again, I would be with the more aggressive segments, which is NBFCs, PSU banks, relative to private banks. Now, that's not to say that private banks won't do well, but the higher growth is essentially coming up in the NBFC space. So that is where you want to have more exposure.
All right. You talked about metals. I want to talk about precious metal. Gold, you are saying that equity could outperform gold. Now, gold at currently 130,000 rupees per 10 grams. Should you now look at perhaps rejigging that pie of asset allocation, given that gold is at an all-time high?
So people who do asset allocation, yes, this is the right time. In India, most people accumulate gold as a savings, buying it every month or buying it on Diwali. That's a different kind of savings which they don't typically sell. So I can't address them and say that, okay, you shift to equity, because it's like you have gold coins and bars sitting at home. But if you actually do an asset allocation between equities and, gold, if you have a significant investment in, either through ETFs, through gold funds and so on, yes, this is the right time to shift away from that significantly back into equities, because that is where the returns, at least over the 12 to 18 months, is going to be. So this is the time to beat. So in fact, if you look at a 10-year or 20-year ratio chart of, Sensex to gold, that's an interesting one that I look at. we are at the bottom end of that ratio chart. So we were at the top end, 1.5 years ago. Now we're at the bottom end. So this is the time where you do the complete rejig, shifting back to equities from precious metals.
All right, and before I let you go, what should be your IPO strategy if you're looking to invest in IPOs? Because lots of known brands are expecting to make their market foray, including from e-commerce, discount broking, from direct to consumer brands are also coming up with their IPOs, including Jio, Lenskart, that our the viewers can see on our screens. Should one look at IPO investing this season?
So IPO investing is always interesting. Most people take it as a trade, which is buy on the IPO and then sell it on listing. However, if you're an investor, in most cases, if valuations are high, I like to wait for the market to give it a fair level. But one of the spaces where we've seen consistent growth has been in companies that have good online business models. And I think that's where a lot of fintechs and others have come in, but not just fintechs, there are companies in various parts of the business in online. So if they're strong on online, I wouldn't actually mind taking an exposure because that's where the biggest growth is happening around the world. But do keep an eye on valuations because sometimes you end up, getting valuations too high. And after listing, prices sell off and you end up, getting to buy them much lower. We've seen that happen in every case from Zomato to Paytm and so on. So that's the thing to keep in mind. Sometimes you want to not fully allocate just on the IPO. You'd want the market to give it a fair price and then, buy additionally at those levels.
All right, Rohit Srivastava, thank you very much, sir, for taking time out for joining us on the show and for sharing with us your insights on how to invest in Samvat 2082. Moving on now, the net foreign direct investment into India fell by as much as 159% in the month of August 2025, with more money leaving the country than entering it in this particular month. Now, this is the second time this financial year that outflows have exceeded inflows. Gross investments into India stood at $6,000 million in August of 2025, which is 30% lower than their levels in August last year and 45.5% lower than in July this year. This was the lowest level of gross inflows in this financial year so far. The amount repatriated and disinvested by foreign companies operating in India stood at nearly $4,000 million in August of 2025, which is down 5.4% over the amount in August 2024. Now, foreign investments by Indian companies contracted by 29.7% in August to $1,736 million, which is the lowest in this financial year. Taken together, this meant that net FDI into India, which is the difference between gross amount coming in and the total amount going out, stood at in a negative of $616 million in August of 2025, which is 159% lower than in August last year. Now, this had happened earlier as well in May of 2025, albeit at a smaller scale, as net FDI had stood at a negative of $5 million during that particular month. However, the FDI picture looks better when looked at over a longer time frame. In fact, net FDI in April to August of 2025 period was at $10 million, in fact $10,000 million, which is more than 121% higher than in the same period last year. So it's not looking very bad when you look at it on a longer time frame as opposed to a month-on-month increase or decrease in net money coming into India by the way of foreign direct investment. And before we go on a short break, let's take a quick look at the headlines we are tracking from all across the world today. US President Donald Trump shelved his plans for Budapest meeting with Russian President Vladimir Putin, says there's no point in talks without real progress towards ending the Ukraine war. And US President Trump says West Asian partners stand poised to intervene if Hamas violates his landmark Gaza peace deal that brought a fragile end to 2 years of fighting with Israel. Donald Trump rules out fresh talks with Democrats, accuses opposition leaders of obstruction while vowing to target their key spending programs until the deadlock is broken. Argentina central bank sells a $45 million in forex markets ahead of midterm polls as the peso slides under political pressure despite continued US support and financial backing from Washington. North Korea launches multiple ballistic missiles in its first test in months, just days before global leaders, including US President Donald Trump, gather in Seoul for regional security talks. Global crude market tumbles as oversupply worries deepen and US-China tensions weigh on demand, fueling broader concerns of a global economic slowdown. American automaker General Motors say profits are improving as costs from Donald Trump's tariff proves milder than expected, giving its electric vehicle division room to recover faster than forecast. Global car makers scramble to secure supplies amid fears of China's new export curbs, fueled by US President Donald Trump's tariff war, could choke production and spark factory shutdowns. And OpenAI launches its own AI-powered search browser in direct competition with Google Chrome, fusing controversial intelligence with web navigation in its boldest consumer tech move yet and till date. All that and more after this very short break.
In association with Can't Do Without Servo 40 Extra from Indian Oil.
Breaking news. Major disruption is expected this week.
Yes, disruption confirmed. That's me, relax, no scams, just my brand new show, News Cosmic with Cyrus.
Big Daddy of elections has arrived. Will Bihar, Gen Z usher in change? Have they emerged as a substantial vote base? We have been able to indigenously develop a system which a lot of countries aspire. We have also drawn that red line, and that's the best part. Donald Trump has been keeping everybody guessing. There are things you can negotiate and there are things you cannot negotiate. The Americans never expected such a tough line from the Indians. You confront a bully up front,
Back, you're watching Morning Brief at 9. A planned summit between US President Donald Trump and Russian President Vladimir Putin has now been put on hold after Moscow rejected calls for an immediate ceasefire in Ukraine. Trump says he decided to shelve the proposed meeting in Budapest later this month, saying that there was no point in holding a wasted summit without meaningful progress. More details in this report.
Nice to be with you.
A planned summit between U.S. President Donald Trump and Russian President Vladimir Putin was put on hold on Tuesday. That pause comes after Moscow's rejection of an immediate ceasefire in Ukraine cast a cloud over attempts at negotiations. A senior White House official told Reuters that, quote, there are no plans for President Trump to meet with President Putin in the immediate future.
You spoke about meeting in Hungary with him. Do you have a timeline or a date set for when?
Yeah, I would say within 2 weeks or so. Pretty quick.
Trump had announced last week that he and Putin would meet soon in Hungary to try and bring an end to the war in Ukraine.
President Trump, sir, do you believe you can convince Vladimir Putin to end the war in Ukraine?
He met with Ukrainian President Volodymyr Zelensky on Friday and afterward endorsed Kiev's demand for an immediate ceasefire based on the current battle lines. Moscow has long demanded Kiev agree to cede more territory before any ceasefire. Reuters and other news organizations reported that Trump's meeting with Zelensky behind closed doors was contentious, with the U.S. president repeatedly using profanity and pushing Zelensky to accept some Russian demands. But Zelensky has painted the meeting as a success because it ended with Trump publicly backing a ceasefire at the present lines.
We had a very good meeting, very cordial meeting. In my opinion, they should stop the war immediately.
You go by the battle line wherever it is, otherwise it's too complicated. You'll never be able to figure it out.
Russian Foreign Minister Sergei Lavrov on Tuesday said pausing fighting on the current front line would mean, quote, forgetting about the root causes of the conflict. He said Russia had not changed its position since Trump and Putin met in Alaska in August, a meeting that failed to advance negotiations.
U.S. President Donald Trump has also warned that his West Asian allies are ready to send troops into Gaza if Hamas fails to uphold his historic peace plan, which brought a fragile ceasefire in a 2-year war with Israel. Now, Trump said that several nations have expressed willingness to act at his request to confront Hamas, but added he has so far held them back, saying not yet. The warning comes just a day after Trump said Hamas would be eradicated if it defied the fragile ceasefire with Israel. Now, meanwhile, U.S. Vice President J.D. Vance is in Israel with top envoys to reinforce the truce amid renewed violence in Gaza. And moving on, U.S. stocks ended mixed on Tuesday, with the Dow leading gains as strong quarterly results from industrial and consumer giants lifted sentiments. General Motors, GE, Aerospace, 3M and Coca-Cola all reported upbeat earnings as the third quarter results season gathered pace. We bring you this report.
U.S. stocks closed mixed, with the Dow adding nearly 0.5%, the S&P 500 flat, and the Nasdaq dipping marginally. Third quarter earnings season has shifted into overdrive, with corporate giants such as General Motors, GE Aerospace, 3M, and Coca-Cola posting generally upbeat results. But with major U.S. stock indexes hovering near record highs and valuations stretched, upbeat results alone could prove insufficient to sustain investor risk appetite, says Richard Mullen, CEO and founder of Palace Capital Advisors.
I think that the majority of the returns have been put in for the market this year. I wouldn't expect a further prolific advancement to the upside. I think we could stay status quo or trade sideways, perhaps down a little bit. Earnings, again, is going to drive the markets, but I also think that a lot of the price appreciation has baked in the earnings that we're seeing right now.
Among those that reported results, General Motors lifted its forecast and tempered its anticipated tariff hit, sending shares up nearly 15%. Coca-Cola shares gained more than 4% after solid consumer demand drove its better-than-expected results. Manufacturer 3M advanced more than 7.5% after hiking its full-year forecast, bolstered by its focus on higher-margin products and cost controls. On the flip side, Netflix dropped almost 6% in extended trading after the streaming company missed earnings targets due to an unexpected expense from a dispute with Brazilian tax authorities.
And oil prices fell to their lowest level since early May on Tuesday, weighed down by fears of oversupply and weaker global demand. Lingering U.S.-China trade tensions have also added to market concerns about a potential economic slowdown. Take a look.
Oil prices fell for a second day on Tuesday amid concerns about excess supply and risks to demand stemming from tensions between the U.S. and China. The world's top 2 oil consumers have renewed their trade war, imposing additional port fees on ships carrying cargo between them, tit-for-tat moves that could also disrupt global freight flows. U.S. President Donald Trump said he expects to reach a fair trade deal with Chinese President Xi Jinping, though key issues like tariffs and tech remain unresolved ahead of their planned meeting in South Korea next week. The head of the World Trade Organization is urging both sides to dial it back, warning that a long-term split between the two economies could shrink global output by 7%. Key global oil benchmarks, Brent Crude and U.S. West Texas Intermediate, both closed at their weakest levels since early May on Monday. Oil prices have been under pressure after the International Energy Agency warned of a potential surplus of nearly 4 million barrels per day by 2026, as producers ramp up output while demand stays weak. The current pessimistic outlook for oil is likely to extend into 2026, with analysts at Goldman Sachs saying on Tuesday they forecast Brent prices may drop to $52 a barrel by the fourth quarter of next year.
And moving on now, e-commerce giant Amazon's cloud services is back online after a massive outage that disrupted thousands of websites globally. It marked the most significant internet breakdown since last year's CrowdStrike malfunction, which had crippled banks, airports and hospitals, once again underscoring how fragile the digital ecosystem remains. Take a look.
Amazon Web Services returned to normal operations on Monday afternoon, the company said. That was after a major internet outage that disrupted thousands of sites worldwide, including some of the web's most popular apps like Snapchat and Reddit. Despite being back online, Amazon says some AWS systems are still working through a backlog of messages, which could take a few hours to process. The outage had a global impact. AWS powers applications and systems for companies across the world, and the disruption left workers from London to Tokyo offline. Everyday tasks, from paying a hairdresser to rescheduling flights, were suddenly halted. Even on Monday afternoon, users reported lingering issues with services like digital wallet Venmo and video calling site Zoom. This marks the most significant internet disruption since last year's CrowdStrike malfunction, which crippled hospitals, banks and airports, underscoring just how fragile the interconnected digital world can be. It was at least the third major incident in 5 years linked to AWS's US East 1 data center in Northern Virginia. Amazon did not address a request for more clarity on why this particular region keeps getting affected. The root of the problem was traced to the Domain Name System, or DNS, which prevented applications from finding the correct address for AWS's DynamoDB API, a cloud database, critical for storing data.
And Novo Nordisk's biggest investor has taken control of the drug maker's board, prompting the resignation of its chair and 6 independent directors. The investors say that the company needs to refocus on US market to revive sales of its blockbuster weight loss drug Wegovy. This boardroom clash has thrown the company, which was once Europe's most valuable firm, into fresh turmoil. Take a look.
Novo Nordisk's top shareholder moved to take control of the company's board Tuesday in an effort to revive sales of its blockbuster weight loss drug Wegovy in the key U.S. market. It comes as the board chair and 6 other board members quit. The nonprofit Novo Nordisk Foundation, which combines business ownership with philanthropy, said it would propose former CEO Lars Rebien Sørensen as chair to lead the Danish drug maker's board for the next 2 or 3 years. The clash brings fresh upheaval to a company that soared to become Europe's most valuable company last year on the huge success of Wegovy. This year, the stock has plunged more than 40% as rival Eli Lilly grabbed market share. The foundation criticized the outgoing board for being too slow to recognize shifts in the key U.S. market and too cautious on management change. However, the foundation is still backing CEO Mike Dustar, who took over in August, and has ushered in widespread job cuts and a drive to refocus the company on its key markets. One portfolio manager told Reuters he did not favor the changes, saying, quote, "I don't really get it. Why does the old CEO have to be the new chairman? Don't like it." U.S.-listed shares of Novo Nordisk fell 1.7% Tuesday.
All right, moving on now. General Motors has raised its profit outlook for this year, citing easing traffic costs, tariff costs and smaller losses from its electric vehicle division. The American automaker says the impact of President Donald Trump's tariffs on its operations has been less severe than expected. Take a look.
Shares of General Motors surged more than 15% Tuesday morning after the company raised its profit outlook, putting them on track for their biggest single-day jump in 6 years. The automaker says the impact of U.S. President Donald Trump's tariffs on its business has been less than expected. GM also said it is experiencing lighter losses on electric cars as it unwinds massive bets it made on the technology. CEO Mary Barra told investors in a letter that, quote, "It is now clear that near-term electric vehicle adoption will be lower than planned," citing changing regulations. "By acting swiftly and decisively to address overcapacity, we expect to reduce EV losses in 2026 and beyond." Though she added the vehicles remain its North Star. GM's quarterly adjusted earnings per share fell but topped expectations. Revenue marginally declined from a year earlier. Still, GM's results could be hampered by supply chain disruptions, additional EV charges, and increased warranty costs. U.S. car sales have stayed strong despite uncertainty around tariffs, rising 6% in the third quarter. While automakers have largely avoided raising sticker prices to offset their tariff costs, American car shoppers have continued to opt for pricier models and added features. Automakers have also been ramping up U.S. investments to help deal with Trump's tariffs. GM announced in June that it would invest $4 billion at 3 U.S. facilities in Michigan, Kansas, and Tennessee. The automaker has previously imported about half of the vehicles it sells in the U.S., mainly from Mexico and South Korea.
And now on to news from tech space. ChatGPT maker OpenAI on Tuesday announced an Atlas search browser leveraging its artificial intelligence prowess in a direct challenge to Google Chrome. CEO Sam Altman says that the browser integrates an agent mode allowing ChatGPT to search the internet on users' behalf, and Atlas will be free on Apple computers with premium access for Plus and Pro users. OpenAI has ramped up its challenge to Google, which has responded by rapidly building more AI capabilities into search and across its platforms. And that's all we have on Morning Brief at 9. News and updates will continue on the other side. You're watching News 9.
That goat is long dead, but Cyrus Bhai are still alive. Game Cho. This is God's office calling. You're not a VIP, so God won't speak directly, but here's the deal. You have been granted a second chance with a brand new news show.
Thank you very much. Just one thing. You said 2 more lives. So I'll first be a newsman who will